There are two classification of lease. Pag sinabi mong finance lease, that is a classification of lease that substantially transfers all the risks and rewards related to the ownership of the underlying asset. Finance lease is a classification of lease that substantially transfers all the risks and rewards related to the ownership of the underlying asset. Pag sinabi mong operating lease, di ba residual definition? That is a classification of lease other than finance lease. Pero class, under PFRS 16, okay, sinabi niya kung sino ang papasok dyan sa operating lease na yan. These are what? The short-term leases and the low-value leases. Pag sinabi natin short-term leases, edi less than 12 months. Pag sinabi natin low-value leases, ibig sabihin mababa ang value. However, the standards did not provide kung magkano ang threshold o definition ng low value, meaning that would now fall under the professional judgment. Okay? May mga indicators ng finance lease. Ito pa rin yon. The indicators of finance lease, there are 4 major indicators. 4 in the sense na ito ang ginagamit for problem-solving purposes. Napakadami po kasi ng mga indicators ng finance lease. Pero these are the 4 major indicators. 1, merong transfer of ownership. Okay. Pangalawa, may purchase option. Purchase option that is exercisable. Exercisable in the sense na i-exercise yan ni lessee at the end of the lease term. Ano nga ba kasi ang purchase option? Purchase option is an option granted to the lessee to purchase the underlying asset or the lease asset at the end of the lease term. Why exercisable? Because the lessee is given the option to purchase the underlying asset at an amount that is substantially lower than the fair value of the underlying asset at the end of the lease term. Yun, ibig sabihin, binibigyan si lessee ng pagkakataong bilhin ang underlying asset sa hindi mo matatanggihang presyo. Bakit? Substantially lower than the fair value of the asset at the end of the lease term. Kaya yan, exercisable. Ang dating tawag dyan, bargain purchase option. Then we have the 75% rule. The 75% rule, wala naman sa standards niyan. Okay? Sinabi ko lang para mas madaling tandaan. 75% rule means that the lease term is at least 75% versus the remaining useful life of the underlying asset. Again, that the lease term is at least 75% versus the remaining useful life of the underlying asset. Sa PAS 17, ang sabi dyan, lease asset. Sa PFRS 16, ang sabi, underlying asset. But those words refers also to the same property na pinapa-lease. And the 90% rule, again, there is no such thing as 90% rule na mababasa ka sa standards, tawag ko lang yan. Wherein the present value of the lease payments is at least 90% versus the fair value of the asset at the inception of the lease. Okay? So, those are the indicators of finance lease. Ngayon, pagdating sa lessor, ang finance lease niya can be classified into 2. You have the direct financing lease and the sales type lease. Okay? Siyempre, may operating lease pa rin naman yan si lessor. Okay? The direct financing lease, the lessor is a financing company, while under the sales type lease, the lessor is the manufacturer or the dealer. Ang kita dyan sa direct financing lease ay purely interest income, while under sales type lease, ang kita dyan ay purely interest income plus the profit or what you call dealers or manufacturers profit. Okay. Pagdating naman sa lessee, ang sabi ni PFRX 16, lahat ng lease ni lessee should be under finance lease. Pero nilagyan ng dalawang exemptions. Ano yung exemptions na yon? Pwede ang operating lease kung yan ay short-term leases or low-value leases. Okay. So, let's now go to the accounting of this. Kung ang lessee pala, i-account niya, okay, almost all leases niya as finance lease, ano ngayon ang accounting ng finance lease? Again, hindi tinanggal ang operating lease, nga lang may exemptions. Kailan na hindi gagamit ng finance lease si lessee? Kapag ang lease ay short-term leases or low-value leases. Short-term leases, less than 12 months. Low-value leases, it is based on the professional judgment that that is a low value because the standards did not provide what is the threshold for low value. So let's now go to the accounting of finance lease on the part of the lessee. Dalawa ang i-recognize niya. One is the lease liability and the other one is the right of use asset. Isang liability at isang asset. This asset is considered as a non-current asset that is incorporated under the property, plant, and equipment. And how to account now the lease liability? Ang lease liability mo, that should be measured at the present value of the lease payments. Ano ngayon ang lease payments? Ang lease payments mo, class, 5 yan. Okay? You have the fixed rental payments, the variable rental payments, the purchase option that is exercisable, you have the guaranteed residual value, and the termination penalty. Again, lease liability should be measured at the present value of a lease payments. And the present value of lease payments, nakadepende yan sa lease payments. So ano ang lease payments? 5. The fixed rental payments, the variable rental payments, purchase option that is exercisable. What is again the purchase option that is exercisable? An option granted to the lessee to purchase the leased property at an amount that is substantially lower than the fair value of the asset at the end of the lease term. While the guaranteed residual value is the guaranteed amount of the underlying asset at the end of the lease term. And what is a termination penalty? Because there are some contracts that there is a provision that either the lessee or the lessor can pre-terminate the lease prior to the agreed lease term. Example, if the contract of lease is 5 years, however, there is a provision in the contract of lease that either party can terminate the lease on the 4th year, meaning there would be a termination penalty once the option to terminate is exercised by either party. And that is your termination penalty. So these are now your lease payments. Pero ano ang sabi? Lease liability should be accounted at the present value of the lease payments. Meaning, hindi pa tayo tapos. Kasi ang na-identify mo pa lang ay yung lease payments. What you need to do is to get the present value of these lease payments. Paano? Gagamit ka ng present value factor. Ang present value factor ay depende sa isang effective rate. To get the present value factor, dalawa ang makikita mong rates sa lease problem. Isang tinatawag na implicit rate at isang incremental borrowing percentage. Ano ngayon ang gagamitin mo sa pag-compute ng present value factor? Would that be dependent on the implicit rate or would that be dependent on the incremental borrowing rate? To get the present value factor, use the implicit rate as the basis in computing for that. However, in the absence of implicit rate, use the incremental borrowing percentage. Ulitin natin. To get the present value factor, use the implicit rate as the basis. Do not use the incremental borrowing percentage. However, in the absence of implicit rate, that's the time that you can use the incremental borrowing percentage as the basis in computing the present value factor. So let's now proceed to the computation of the present value of your lease payments. Since fixed rental payments are series of payments, then you will use the present value factor of an annuity. However, there are two annuities, the ordinary annuity and the annuity due. You will use the present value factor of an ordinary annuity if the date of transaction did not coincide with the date of first lease payments. Example, if the date of transaction is January 1 and the date of first lease payments is December 31, then you will use the present value of an ordinary annuity. While use the present value of an annuity due if the date of transaction coincides with the date of first lease payments. Let's say the date of transaction is January 1 and the date of first lease payments is also January 1. Next, we have the variable rental payments. The only difference between the fixed rental payments and the variable payments is the amount. The amount in the fixed rental payments are the same, while the amount of rental payments in the variable rental payments varies. But these variable rental payments are also payments in series of payments. Madami pa din, di ba? Just like the fixed rental payments. Let's say on an annual basis, in a span of 10 years, among others. So, you will use again the present value factor of an annuity. But consider the variability index. Okay, variable index. Then we have the purchase option. Purchase option is an option that can be exercised at the end of the lease term. So we are talking to a single specific date and that is at the end of the lease term. So one time ang payment, one time ang basis. Therefore, we will use the present value factor of 1. Then we have the guaranteed residual value. Guaranteed residual value is the guaranteed amount of the underlying asset at the end of the lease term. And again, we are talking about a specific period, one specific period, and that is at the end of the lease term. That is why we will be using the present value factor of 1. And the termination penalty is an option to terminate granted to either lessee or lessor to terminate the lease at a specific period. Meaning, we are also talking to a specific period or one-time specific period. That is why we will be using the present value factor of 1. So after getting the present value of these lease payments, that is now the initial measurement of your lease liability. Okay? And what is the subsequent measurement of that liability? It is just the amortized cost using the effective interest method of amortization. Matagal mo nang alam to. Effective interest method of amortization. Let's now have the right of use asset. What is the initial measurement of the right of use asset? Use the present value of the lease liability, okay, plus any advance payments minus lease incentives. The present value of the lease payments here plus the advance payments minus the incentives. Then you have the initial direct costs. Initial direct costs are necessary items in the negotiation of the lease, and they should be capitalized. And you will use the present value of the decommissioning and restoration cost. What is this decommissioning and restoration cost? In some leases, let's say na nag-lease ka ng isang lupa. Ngayon, ang sabi sa iyo ng lessor, saan mo ba yan gagamitin? Magtatayo po ako dito ng negosyo. So, ibig sabihin, magtatayo ka dyan mga, ng mga structures. Tama po. Pero pwede ba, pagtapos ng lease term, ibalik mo siya sa kondisyon at itsura kung paano mo nakuha? Pumayag ka. Ibig sabihin, at the end of the lease term, you will incur as the lessee the so-called restoration cost. Kasi gigibain mo yung mga structure na itinayo mo dyan at gagastos ka. And that is now your decommissioning and restoration costs. Let's say, at the end of the lease term, let's say 10 years, at the end of the lease term, ang tansya mo, gagastos ka ng 50,000 pesos sa pagpapagiba ng mga structure na itinayo mo at para maibalik sa may-ari sa itsura kung paano mo nakuha ang asset. So, that 50,000 now is the estimated amount to be incurred by the lessee in restoring the underlying asset when at the end of the lease term, meaning at the end of the 10th year, meaning that 50,000 pesos is a future amount. That is why, kung tatanungin ka lang ng year number 1, do not use the whole 50,000 here because that 50,000 is a future value. What you need to do is to get the present value of that 50,000 pesos to account what should be capitalized or included as part of the right of use asset in a specific year, and in particular, for example, year 1. And that is now your right of use asset. That is your RUA in some wordings na ginagamit ng mga professor. Right of use of asset, RUA, ARWA, yan yung mga tawag ngayon. So this is now the cost of your right of use asset, which is the initial measurement of that right of use asset. Again, this is considered as part of your non-current asset to be incorporated as part of your property, plant, and equipment. And what is now, sir, the subsequent measurement of that right of use asset? That should be subsequently measured at its carrying value. Carrying value is computed by using the formula cost minus the accumulated depreciation, and that is your carrying value. Ang problema, class, yung pag-compute ng depreciation expense. Bakit, sir? Mahirap ba ang pinapagamit na method in computing the depreciation expense? Hindi. Ang pinapagamit lang naman is the straight line method. Eh di ang dali lang, sir. Madali nga. Ang problema, the formula for the straight line method is what? You have your cost minus residual value divided by a certain number of years. In property, plant, and equipment, straight line method depreciation is computed by using the formula cost minus residual value divided by the remaining useful life of the property, plant, and equipment. However, under finance lease, tenga ka sa ilalim sa number of years. Why? We're talking about two number of years here. One, you have the remaining useful life of the underlying asset, and you have two, the lease term. And what is the proper denominator to be used in computing for the depreciation expense of the underlying asset? Ito lang ang tatandaan mo. Just ignore this 1, 2, 3, 4. Okay, para mabilis. If there would be, if there would be a chance that the leased property or the underlying asset will be transferred to the lessee at the end of the lease term, then depreciate the asset using useful life. Again, if there would be a chance of the so-called transfer of ownership from the lessor to the lessee at the end of the lease term, then depreciate the asset using useful life. If there would be a chance that the underlying asset will be transferred to the lessee at the end of the lease term, then depreciate the asset using useful life. Ang tanong, kailan sir magkakaroon ng probability o tsansa na magkaroon ng lipatan ng ownership at the end of the lease term? Una, kapag ang kontrata ng lease ay inilagay na magkakaroon ng transfer of ownership at the end of the lease term, sigurado yon. Ano pa? Kapag merong purchase option, there would be a chance that the lease asset will be transferred to the lessee at the end of the lease term if there is a purchase option, whenever that the lessee exercise the option. If the lessee or exercise the option, then the lease property, the underlying property, the underlying asset will be transferred to the lessee at the end of the lease term. Okay? However, if there is no chance or probability that the lease asset will be transferred to the lessee at the end of the lease term, then depreciate the asset using the shorter between the useful life and the lease term. Again, if there is no chance or probability that the lease asset will be transferred to the lessee at the end of the lease term, then depreciate the asset using the shorter between the useful life and the lease term. Paano ko sir masasabi kung walang potensyal na lumipat ang ownership o lumipat ang underlying asset sa lessee at the end of the lease term? Pag wala kang nakita sa problem na may provision ng transfer of ownership o kaya wala kang nakita sa problem na merong purchase option that is exercisable. Okay? So meaning, settled na yung denominator natin. May isa pang problema. Ano yun? Residual value. A residual value class may be guaranteed or unguaranteed. Guaranteed o kaya hindi guaranteed. Ngayon, kailan mo i-consider ang residual value sa pag-compute sir ng depreciation? If there is a chance or potential that there would be a transfer of ownership or the underlying asset may be transferred to the lessee at the end of the lease term, then deduct the residual value whether the residual value is guaranteed or unguaranteed. However, if there is no chance or probability that the lease asset will be transferred to the lessee at the end of the lease term, you will only deduct the residual value if the residual value is guaranteed. Again, this residual value will be deducted to your cost. It will now depend if, number one, if there would be a chance or probability that the lessee or the underlying asset will be transferred to the lessee at the end of the lease term, then deduct the residual value, whether guaranteed or unguaranteed. On the other hand, if there is no chance, potential, or probability that the lease asset or the underlying asset will be transferred to the lessee at the end of the lease term, then deduct the residual value if the residual value is only guaranteed. And that is the concept of finance lease related to the lessee. Let's now solve problem 1. The requirement for problem 1 is for us to compute the carrying value of the lease liability and the carrying value of the lease liability. Bakit ganun? Pareho. Magkaiba ang date. Requirement 1, carrying value of the lease liability on January 1, 20X1 and carrying value of the lease liability on December 31, 20X1. Then the carrying value of the right of use asset January 1 and the carrying value of the right of use asset December 31. Let's read the problem. The company, Austin Company Lessee, entered into a contract of lease with Kirsten Company, the lessor, with the following details. On January 1, X1, okay, the contract of lease conveyed the right to use the asset or for 5 years in exchange for annual lease payments of 1 million in payment of 1 million payable every January 1 and each year beginning 20X1. Okay. So let's dissect letter A. There is a contract entered into between the lessee and the lessor. Okay? On January 1, 20X1, that the lease property or the underlying asset is a building to be leased or used by the lessee for a period of 5 years in exchange for an annual lease payments. And the annual lease payments will be paid at the start of the lease, wherein January 1, 20X1 and payable every January 1 thereafter, starting 20X1. Let's move to item B. Austin Company paid the first lease payments due on January 1, 20X1 and the annual executory cost is 35,000 and the initial direct cost is 100,000. Okay. Dun sa mapa kanina, meron akong nakalimutang i-discuss. Okay. Ito, sa mapa kanina, may makikita ka ditong executory cost. No? The executory cost is treated as expense. These are the minor, insignificant expenses, no, incurred during the negotiation of the lease. Okay? So, Austin Company paid the first lease payments due on January 1, 20X1 and the annual executory cost is 35,000 and the initial direct cost is 100,000 pesos. Okay. The accounting treatment for this 35,000 should be an outright expense, while the initial direct cost is what? That is a capitalizable cost in computing for your right of use asset. Again, the right of use asset, to compute for that, you must have the value of your liability, advance payments minus incentives, initial direct cost, the present value of the decommissioning and restoration cost, and that is your ARWA. So the initial direct cost cited in letter B, this is a capitalizable cost. Then we have letter C. On same date, Kirsten Company makes the underlying asset available for use. This is now what you call the date wherein pwede mo nang gamitin. This is now the commencement of the lease. Okay? Moreover, Austin Company received 350,000 pesos worth of lease incentive from Kirsten Company. So this 350,000 is your lease incentive, and that lease incentive is a reduction in computing for the right of use asset. Then we have letter D. The building is expected to be economically useful for 8 years from the commencement of the lease. And this item D refers to the useful life of the underlying asset. Letter E, they agreed that by the end of the lease term, the ownership of the underlying asset will be transferred to the lessee, and that is to Austin Company. Then, letter F, the contract of lease provides that Austin will have to restore the underlying asset to the condition required by the terms and conditions of the lease, and these costs were estimated to be at 200,000. Again, this is the amount that is expected to be incurred by the lessee in restoring the property at the end of the lease term. And the implicit rate is 10%. Okay? So, carrying value of the lease liability, January and December 31. Okay. Ngayon, sabi natin kanina, the finance lease liability should be measured at the present value of your lease payments. So, mag-start ka sa lease payments. Ano nga ulit ang lease payments mo? 5. The fixed rental payments, the variable rental payments, the residual value guarantee or the guaranteed residual value, the purchase option which is exercisable, and the termination penalty. Fixed rental payments, variable rental payments, guaranteed residual value, purchase option that is exercisable, and the termination penalty, those are your lease payments. And we will compute for the present value of the lease payments. Pero ang tanong, ano ba ang pumasok na lease payments sa problem na to? Yes, you have your fixed rental payments. And the fixed rental payments is what? That is 1 million on an annual basis. So that is your fixed rental payments or fixed lease payments. Next, meron bang pumasok na variable payments? Wala. Meron bang pinag-usapan na residual value? Wala din. Meron bang purchase option? Wala din. May termination penalty? Wala din. So, ibig sabihin, ang lease payments na pumasok ay isang fixed rental payments lang. And what we need to do to compute for the present value and carrying values of the liability, we must get the present value of this. Is this a series of payments? Yes. So we will now be using the present value of an annuity. Ang tanong, what is now the present value of an annuity to be used? Is this an ordinary annuity or an annuity due? Chat box, please. Okay, what is to be used? Ordinary or annuity due? We will be using the annuity due. Okay? Okay, we will be using the annuity due. Why? Because the date of transaction is January 1 and the date of first payment, lease payments is also on January 1. Okay, can you please compute now what is the present value factor of an annuity due? But what is, sir, the discount rate or the effective rate to be used? You will use the implicit percentage of 10%. What if there is a given incremental borrowing percentage? Let's say the incremental borrowing percentage is 8%. What is to be used? 10% or 8%? Chat box, please. Okay, anong sabi natin? You will use the implicit rate as the basis in computing for the present value factor. Do not use the incremental borrowing percentage. However, in the absence of the implicit rate, that's the time that you will use the incremental borrowing percentage as the basis in computing the present value factor. Can you please compute now what is the present value factor of an annuity due at 10% and is equal to 5 years. Okay? What is the present value factor of an annuity due at 10% and is equal to 5? And that should be, chat box please. Okay? Paano computein? 1.10. Ito, nilagay ko na. Dalawang divide. 4 na equals minus 1 divided by 0.10 minus 1. 1.10, dalawang divide. 4 na equals. Bakit 4 lang, hindi 5? Kasi may advance payment eh. 4 na equals minus 1 divided by 0.10 minus 1. And the present value of an annuity is what? Of an annuity due. That is, sige class, calcu, 1.10, dalawang divide, 4 na equals minus 1 divided by 0.10 minus 1. That is, 4.16. Di ba? That is the present value factor. January 1, 4.16. Ito yun. Okay. So, ito yun. Di ba? The present value is 1 million times 4.16. This is the present value factor of an annuity due at 10% n is equal to 10. 1.10, pantindahang calcu, 1.10, dalawang divide, 4 na equals minus 1 divided by 0.10 minus 1. So this is the present value of the liability, lease liability, January 1. But the requirement is for us to compute the carrying value of the liability. Okay, January 1. If we are asked to compute for the carrying value of the liability January 1, then consider any advance payments. May advance payments ba? Yes. Kasi the lease provides that the first lease payment should be done on January 1, 20x1, and every January 1 thereafter. So ito yon, 1 million. 4.16, 4.17 million minus the payments, there is no interest. Why? Kasi hindi naman tumakbo ang araw. So minus 1 million, this is 3.17 million pesos. Ibig sabihin class, kung nandito ka sa formulang to, 1 million times 4.16. Okay? Ibawas mo, nakikita mo to? Ibawas mo yung advance payments para makuha mo yung carrying value. Kasi ang tinatanong, what is the carrying value of the liability January 1? And if there is an advance payments, then deduct any advance payments. So that is 1 million times 4.16 minus 1 million advance payments. The answer is 3.16 million or 3.17 million. Okay? So, ibig sabihin, the answer in item 1 is 3,169,865. Okay. Next, tinatanong, what is the carrying value of the liability December 31? Again, what is the subsequent measurement of the finance lease liability? Diba at amortized cost using the effective interest method of amortization? Diba ito yon? This is the effective interest method of amortization. From this January 1, wala na namang subsequent payment eh. As far as 20x1 is concerned eh. Kailan ulit nagbayad? Diba 20x2 na? January 1, 20x2. Eh, ang tinatanong, December 31 eh. Ibig sabihin, ano lang ang kakarga? Interest lang. Anong interest mo? Di ba 10%? That is 3.16, 3.17 times 10%. Ito yon 316. So ito lang yung dadagdag dito sa carrying value mo. So 3.17 plus the interest. So that is now 3,486,851.50. Pero class, hindi mo naman kailangan gumawa nito eh. Kasi pag dito, na-compute mo na yung 3.17 million, alam mo na interest lang naman yung kakarga. Wala namang payments na nangyari. Walang lease payments na mangyayari kasi sa next year pa yon. So, ibig sabihin, ito, i-multiply mo na lang ng 1.1, 1.10. Okay, so this is 3.17 times 1.10, 1.10, ito yun. Okay, 3.17 times 1.10, that is now 3,486,851.50. Okay? Game. Third requirement. What is the carrying value of the right of use asset? Ang tanong class, carrying value ha. Okay. Ng January 1. Siyempre, kung ano yung carrying value mo dito ng obligasyon, ito ang gagamitin mo dito. Okay? Carrying value of the liability. This is 3,169,865. Ito yon. Meron bang advance payments? Meron. Di ba advance payments mo 1 million? Meron bang lease incentive? Meron. Magkano ulit? Sabi ni item C, 350,000. So 1 million minus the incentive of 350,000, this is 650,000 pesos. Meron bang initial direct cost? Meron. Magkano initial direct cost natin? Di ba 100,000? That is a capitalizable cost. Then we have the present value of the decommissioning and restoration cost. The restoration cost is 200,000 pesos. Di ba? 200,000 pesos yan. Pero yung 200,000 pesos na yan, kailan mai-incur? At the end of the fifth year. Ibig sabihin, sa ikalimang taon pa. So, hindi mo pwedeng gamitin yung 200,000 dito. Okay? Bakit? Kasi this is an amount that is to be incurred in the fifth year at the end of the lease term. And this is now a future amount. What we need is the present value. Since this amount is an amount that is to be incurred on the fifth year, at the end of the lease term, we are talking to a specific period. And if we are talking to a specific period, then we will be using the present value factor of 1 in computing for the present value of this. Can you please compute now what is the present value factor of 1 at 10% and is equal to 5? What is the present value factor of 1 at 10% and is equal to 5? Chat box please. 1.1, dalawang divide, 5 equal. So that is 0.62. Ito yon. So 200,000 times 0.62. So I've used 6 decimal places here. 200,000 times 0.620921. And this is the present value in 20x1. So this is now the cost of your ARWA, right of use asset, that is 4,044,049.20. So we have here as our answer in item 3. But what about the carrying value of the right of use asset on December 31? So we are talking about the first year. So this is now the cost of your asset minus the accumulated depreciation. Since we are just in the first year, your depreciation expense would now be equal to your accumulated depreciation. But the thing is this. We will be using the straight line method of depreciation straight line method in computing for the depreciation expense. Yes, we have our cost. 4,044,049.20 minus residual value. There is no residual value in problem 1. Okay? But what is now the number of years that we will be using? Would that be a 5-year period, or would that be the useful life of the asset 8 years? Okay? What is the concept? If there would be a chance of a transfer of ownership, or if there would be a chance or probability that the lease asset will be transferred to the lessee at the end of the lease term, then depreciate the asset using useful life. If there is no chance, probability, or potential that the lease asset will be transferred to the lessee at the end of the lease term, then depreciate the asset the shorter between the useful life and the lease term. My question now is this. Did the problem mention about any of a transfer of ownership or a potential that the lease property or the underlying asset be transferred to the lessee at the end of the lease term? Yes or no? Meron ba? Yes. If that is the case, what should be the denominator to be used? 8 or 5? 8, useful life. So this should be divided by 8 years. So this is the depreciation expense equal to the accumulated depreciation because this is just the first year. And this is now the answer in problem 4, requirement 4. 3,538,540.05. Let's now move to number 2. Okay. So, on January 1, X1, the contract of lease conveyed the right of use asset, which is a building, for 5 years in exchange for an annual lease payments of 1 million payable every January 1, beginning 20X1 and every January 1 thereafter. Pareho din pala sa kabila. Okay? So, a contract of lease entered into by the lessor and the lessee to use the building under a contract of lease for a period of 5 years, and the lease payment will start January 1 and to be paid every January 1 thereafter after 20x1. And Austin Company paid the first lease on January 1. Annual executory cost is 35,000 and the initial direct cost is 100,000. Again, 35,000 executory cost. This should be treated as expense. And the initial direct cost is a capitalizable cost that is added to the carrying value of your asset, right of use asset. On same date, the company makes the underlying asset available for use. Moreover, the company received 350,000 worth of lease incentive. Again, lease incentive is a reduction to your advance payments in computing for the ARWA. What about, sir? If there is no advance payments, therefore, that should serve as a deduction also in computing for the right of use asset. Then we have letter D. The building is what? The building has a useful life of 8 years. And we have letter E. Kirsten agreed to a purchase option with an exercise price of 500,000 that is reasonably certain to be exercised by Austin by the end of the lease term. Okay? The contract of lease also provides that Austin Company will have to restore the underlying asset. Okay? And the amount estimated to be incurred at the end of the lease term is 200,000 and the implicit rate is 10 years. Okay. Question. Ano ang pumasok na lease payments natin? We have the fixed payments amounting to 1 million. Ano pa? Walang variable, walang residual value, pero merong purchase option amounting to 500,000 pesos. Okay? So these are now our lease payments. So we will compute for the present value of this using the present value factors. And again, we will be using the present value of an annuity due at 10% implicit rate and is equal to 5 under the fixed payments because this is a series of payments. So we will be using 4.16. That is the computed present value factor of an annuity due earlier. But what about the purchase option? What is to be used? Are we using the present value factor of an annuity or just the present value factor of 1? Chat box, please. We will just be using the present value factor of 1 because this refers to a single date. And that is at the end of the lease term wherein the lessee has the option to exercise to purchase the property, underlying asset at an amount substantially lower than the fair value of the asset at the end of the lease term. So, what is the present value factor of 1 at 10%? N is equal to 5. We've computed that earlier, and that is 0.62. Okay? So, again, to compute for this, 1 million times 4.16, but deduct the advance payments since we are asked to compute for the carrying value. Okay, so this is just 3.16 and 500,000 times 0.62. This is 310,000 and the answer now is 3,480,325.50. If we will be using the effective interest method of amortization, ito ay tsura niya eh. Ito ang initial measurement mo eh. Diba the initial measurement is the present value of the lease payments? Ito yun. So, your lease payments includes the fixed rental payments that is 1 million times 4.16 ito and the purchase option. And the purchase option is 500,000 times 0.62. This is 310. So, this is the initial measurement. 4,483,225.50. Okay? And ang tinatanong kasi, carrying value, then consider any advance payments. And there is amounting to 1 million. Therefore, this is 3.48 million. Therefore, this is now the carrying value of the liability January 1. And the second question is to compute for the carrying value of the lease liability December 31. So, paano yun? Eh di, dadagdagan mo lang ng interest. Okay? Because the next payment is January 1, 20x2 na. Ibig sabihin, just multiply this by 1.10 para kumarga yung interest na 10%. And the answer for requirement 2 is 3,828,358.05. That is just 3.48 times 1.1. Ito makukuha mong value. Then, third requirement, carrying value of the asset ng January 1. So use the carrying value of this, of the liability as the starting point. Okay. Then advance payments, yes, there is a 1 million advance payment. Incentive, yes, there is a 350,000 incentive. So this is 650,000. Initial direct cost, yes, there is a 100,000 capitalizable initial direct cost. And we have the present value of the decommissioning and restoration costs. What is the amount of that restoration cost? 200,000. And we've computed this earlier. 200,000 times the present value factor of 1 of 0.62. This is 120 for 184.20. And the total of this would be the cost of your right of use asset, 4,354,507.70. And let's now deal with the most common question in the board exam, the depreciation expense and the carrying value of the right of use asset. So your right of use asset has a cost of 4.35 million. Okay? There is no residual value. We're computing now for the depreciation expense. So that is 4.35 million minus the residual value of how much? Zero. And what should be the denominator to be used? The first question that you should ask, is there a potential transfer of ownership, yes or no? Is there a chance or possibility that the lease asset will be transferred to the lessee at the end of the lease term, yes or no? The answer is yes, because there is a purchase option. If there is a purchase option, there is a chance that the lease asset will be transferred to the lessee once the lessee exercises the option. If that is the case, what should be the denominator? 8 or 5. So that should be the useful life of 8 years. So this is divided by 8. So this is 54, 544,313.71. And this is now the answer for requirement 4. Let's now move to 3. So in 3, halos pareho lang yan. Nagbabago lang ng kaso. Okay. Pasisimplihin ko na lang, no? Para mas mabilis tayo. In letter A, that is also of the same nature as the previous two problems wherein the lessor and the lessee entered into a 5-year contract of lease and the subject property is a building wherein there would be a payment of an annual lease amounting to 1 million that begins on January 1, 20x1 and every January 1 thereafter. In letter B, there is an executory cost of 35,000 which is considered as an expense, and an initial direct cost of 100,000 which is a capitalizable cost or added to the carrying value of your asset, right of use asset. And in letter C, there is a 350,000 lease incentive. And in item D, nabago to, kanina 8 years eh. The building has a useful life of 6 years. And in letter E, the asset will revert to the lessor at an amount of 500,000 and an amount, no? Ulitin natin, the asset will revert to the lessor and an amount of 500,000 is expected to be payable by Austin under the residual value guaranteed. So this is what? The guaranteed residual value. Then in letter F, there is a restoration cost amounting to 200,000 and item G is your implicit rate. Okay? Now, what are the lease payments na pumasok? We have the fixed rental payments amounting to 1 million pesos. We have no variable rental payments. We have no purchase option. We have no termination penalties. But we have the guaranteed residual value amounting to 500,000 cited in letter E. The asset will revert to the lessor and an amount of 500,000 is expected to be payable by Austin under residual value guaranteed. Class, hindi pwedeng magsama ang purchase option at ang residual value guaranteed. Kasi sa purchase option class, ang underlying asset maaring matransfer sa lessee once the option is exercised. Sa residual value guaranteed kasi, yung asset babalik kay lessor. Kaya hindi pwedeng magsama yan sa problem solving. Though ang composition ng lease payments ay 5, pero sa problem solving, hindi pwedeng magsama ito. Kasi sa purchase option, mapupunta ang asset probable sa lessee. Pag sinabing residual value guarantee, yan yung babalik ang asset sa lessor. Okay? So, hindi pwedeng magsama. Kasi yung isa, ang asset mapupunta sa lessee, yung isa sa residual value guarantee, ang asset babalik kay lessor. Okay? So, ito na ngayon ang lease payments mo. And again, we will be using the present value factor pan annuity due. Ito na rin yun. 4.16 yung kanina. Tapos yung 500,000 natin, what is the present value factor to be used? Annuity or 1? Chat box please. Lagay mo lang 1 or A. Alam ko na yon. For the residual value. The residual value is the guaranteed amount of the lease asset at the end of the lease term. So we're talking about a single specific date. So we will be using the present value factor of 1 at 10% and is equal to 5. That is also 0.62 that we have computed earlier. So this is now 1 million times 4.16 minus 1 million minus 1 million in the sense that there is an advance payment. This is what? Present value of this is 310. So the answer for requirement 1 is 3.48 million pesos. Okay? Then, to get the carrying value of the liability December 31, just multiply this by 1.10 para kumarga yung interest, and the answer now would be 3,828,358. Then, to compute for the cost of your ARWA, we consider the carrying value of the liability here, January 1, 3.48. Advance payments, yes, of 1 million minus the incentive of 350,000. This is 650,000. Initial direct cost, yes, amounting to 100,000 cited in letter B. And the present value of this, we've computed that earlier, 200,000 times 0.62. The present value factor of 1 at 10% and is equal to 5. And this is 124 something. So this is now your cost January 1. This is 435,4509.70. And we are asked to compute the item 4, which is the carrying value of the asset. But again, we must dissect this. What should be the depreciation expense? Okay. Is there a residual value? Yes. Okay. Would that residual value be deducted in our numerator in getting the depreciation expense? Yes or no? Okay. Anong sabi natin? Identify first is if there would be a chance or probability that the lease asset will be transferred to the lessee at the end of the lease term. Siguro mamaya natin pag-usapan sa residual value. Balik tayo sa track. Sa track na sabi natin. Ano ang gagamitin nating denominator dito? Okay? First question. Under problem number 3, did problem number 3 mention about any potential transfer of ownership? Yes or no? Did the problem mention about any chance, potential, or probability that there would be a transfer of ownership in problem 3? Wala. Okay? If that is the case, what should be the denominator to be used? Would that be 8 years or 5 years? 5 years. Anong sabi natin? The shorter between the lease term and the useful life. So our denominator is 5. Okay. Then we'll proceed with the residual value. Will this be deducted? What is the concept? If there would be a chance of a transfer of ownership, then deduct the residual value whether the residual value is guaranteed or unguaranteed. However, if there is no chance that the lease asset will be transferred to the lessee at the end of the lease term, deduct the residual value if the residual value is guaranteed. Babalik ako sa tanong. Will the residual value amounting to 500,000 in problem number 3 be deducted in our numerator, yes or no? The answer is yes, because that is guaranteed. Yes, there is no chance of the transfer of ownership, but the residual value is guaranteed. Then a deduction of that should be considered. Okay, so that should be 4354 509.70 minus the residual value of 500,000 divided by 5 years, and this is your depreciation expense equivalent to the accumulated depreciation because we are just in the first sheet. And this is now the answer in problem 4. Okay, so that is 3.58 million pesos. Let's move to item 4. In item 4, in item 4.a, it says that there is a contract of lease entered into by Austin and Kirsten Company that started on January 1, 20X1, and the starting payment is also on January 1, 20X1, and the subsequent payment of the rentals will be made every January 1 thereafter. In letter B, there is an annual executory cost of 35,000 that is to be treated as an outright expense and an initial direct cost of 100,000 that is to be capitalized when you are asked to compute for the right of use asset. In letter C, there is a lease incentive of 350,000 which is a contra or a deduction to your advance payments. If there is no advance payments, that also serves as a deduction in computing for your ARWA. Then item D, the useful life of the asset is 6 years. Then letter E, the asset will revert to the lessor and an amount of 500,000 is the estimated unguaranteed. This is unguaranteed. Unguaranteed residual value. Then the contract of lease also provides that Austin Company, this is now the estimated restoration cost of 200,000, 10%. So in problem 4, what are the lease payments? There is a fixed rental payment, sir. Would there be variable? None. Would there be a residual guarantee? Would there be a guaranteed residual value? Yes or no? May guaranteed residual value ba dyan? Wala. Because the problem provides unguaranteed. Okay? Is there a purchase option? Wala din. Is there a termination penalty? Wala din. Okay? So, ano lang ang pumasok? Isa lang. So, this is your 1 million times 4.16. 1 million times 4.16 minus the advance payment of 1 million. This is now your answer in requirement 1. Okay? In requirement 2, carrying value December 31, just multiply this by 1.10 to get the carrying value at year end with the consideration of the interest. No? And the answer is 3.48 million pesos. Then we'll move here. What is the carrying value of the asset January 1? Use the carrying value of the liability January 1. Advance payment, yes, of 1 million minus the incentive of 350. This is 650. An initial direct cost of 100,000 capitalized. And again, the present value of this 200,000 decommissioning cost amounting to 124 something. This is now your requirement 3. 4,044,049.20. Ito na yun. Then, the last question, the most favorite, no? One of the favorite items in the board exam to compute for the carrying value of the right of use asset as well as the computation of the depreciation expense. Okay. So, question, would there be a potential transfer of ownership here? Yes or no? Would there be a potential transfer of ownership? None. Okay. So, what should be the denominator to be used? Life of 6 years or lease term of 5 years. So we will be using 5 years. Okay. Then, will we consider the reduction of the residual value in the numerator? Yes or no? The answer is no because there is no chance. Okay? Okay. So this is 4,044,000 divided by 5 years and the answer is 808 depreciation expense and this is the carrying value December 31. What if there is a transfer of ownership? What if there is a transfer of ownership? Will we deduct the residual value provided in problem number 4 in our numerator in getting the depreciation expense? The answer is yes. if there is a potential transfer of ownership. Okay? Next, let's go here. What about ano ba to? But requirement na kagad. Tanggalin natin. Yan. Problem 5. Oh. Again, letter A, the same as the previous 4. Letter B, the same as the previous 4. Letter C, the same as the previous 4. Letter D, the useful life of the building is 8 years. Letter E, they agreed that by the end of the lease term, the ownership of the underlying asset will be transferred to the lessee, to Austin Company. Then we have item F. The contract of lease provides that Austin Company will have to restore the underlying asset, and the estimated cost of restoration is $200,000, and the implicit rate is 10%. That is now your letter H. An amount of $500,000 represent payment of penalties for terminating the lease, and the lease term reflects the lessee exercising an option to terminate the lease at the end of the 4th year, and the dismantling cost at the end of the 4th year is estimated at 150,000 pesos. Again, an amount of 500,000 represent payment of penalties for terminating the lease, and the lease term reflects the lessee exercising an option to terminate the lease at the end of the 4th year. The dismantling cost is 150. So there is now a termination, the pre-termination of the contract, of the lease contract. If that would be the case, ito siya. May fixed rental payments ba? Yes, sir, meron. Magkano? That is 1 million pesos. Okay? Meron bang variable? Wala. Meron bang residual value guarantees? Wala. Meron bang purchase option? Wala din. Pero merong termination penalty na magkano? 500,000 pesos. If there is now the presence of the termination penalty, this is now the procedure to be used. Instead of getting the present value factor of an annuity due at 10% n is equal to 5, hindi mangyayari yun. Kasi i-pre-terminate ang lease at the end of the 4th year. So we will be using a present value factor of an annuity due at 10% n is equal to 4. Bakit 4 na lang, sir, hindi 5? Kasi nga ang pre-termination mangyayari sa 4th year. So hindi na to 4.16. Ano na to? That is 3.48. 1.10, dalawang divide, tatlong equals, minus 1 divided by 0.10 minus 1. So that is 3.48 million pesos na. Ito, magkano na lang? 1 million times 3.48 minus 1 million, this is 2.48 million pesos. Ito, yes, present value factor of 1 ang gagamitin. However, present value factor of 1 at what? At 10% n is equal to 4. Kaya hindi na yan 0.62. Ano na yan? 0.68 na. 1.10, dalawang divide, 4 na equals. So this is now how much? 341. So this is now how much? Answer in problem 1, 2.83 million pesos. And to get the carrying value, December 31, just multiply this by 1.10, and this is 3,111,194. And to compute for this, just use the 2.83 million here. Then advance payments minus incentive. Again, this is 650. Initial direct cost. Again, this is 100,000 cited in letter B. And dito, ingat. Because the present value of the decommissioning cost will now be dependent not on the whole 200,000. Because this 200,000 will be the restoration cost if natapos ang kontrata sa loob ng 5 taon. At the end of the 5th year, this is the estimated restoration cost. Pero hindi nga kasi aabot sa ika-5 taon dahil merong termination ng lease. Kaya ang iyong Amount to be considered here as the restoration cost would not be the 200 but the 150,000 here. Okay, so this is now 150,000 that the cost of restoration cost on the fourth on the fourth year times the present value factor of 0.68, just like this, 0.68. Okay, 1.1, dalawang divide, apat na equals 0.68, and this is how much? This is 102,000 something. And the cost of the asset here is 3,680,810. And this is now 3,680,810. O, eto na ang catch natin dito. Walang residual value. Tanong, denominator tayo. Ang denominator kasi na lumalabas dito, ang pinagpipilian mo, 3 taon na. Kanina, 2 lang eh. Yung lease term tsaka useful life. Dito 3 eh. The useful life of the asset, which is what? 8 years. The lease term of 5 without the termination. And the lease term of 4 with the exercise of the termination of the lease. Ang tanong, would there be a potential transfer of ownership here? Yes or no? Would there be a potential transfer of ownership? The answer is yes if if matatapos ang contract. Kailan ba magkakaroon ng transfer of ownership? At the end of the 5th year. Since you've considered already the termination penalty and the lease contract reflects that the lessee exercising the option to terminate the lease, sa tingin mo, aabot pa ba ng 5th year? Yes or no? Kung i-terminate na ang lease, hindi na. Sa tingin mo, magkakaroon pa rin ba ng transfer of ownership kung hindi na aabot sa 5 taon? Yes or no? Wala na. Ibig sabihin, walang mangyayaring transfer of ownership since there would be a pretermination of the lease. So your denominator should be the lower between the 8 years, the 5 years, and the 4 years. And what should be the denominator to be used? 8, 5, or 4. The denominator is 4 years. Okay? So yun na yun. Yan na. Okay? Yan ang finance lease on the part of the lessee.